please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, welcome to a fresh new edition of Chartbusters, a show where we highlight the buzzing stocks of the day, get you expert advice as well. But as we do that, we're awaiting the big NCLT verdict on the Cyrus Mistry Tata case. I'm Mangalam Malu. With me is Nigel D'Souza this morning. Hi, Nigel.
Hey, Mangalam. Let's kickstart the show then with all the top stories at this point of time. Metal stocks like Vedanta and Hindalco, they gain in trade. The dollar struggles near the 3.5-week low after slower than expected wage growth in the United States.
Sterlite Technologies. That one is in focus to expand its global presence, acquires 100% stake in European specialized optical cable manufacturer Metallurgical Bresciana for 47 million euros. Management tells CNBC TV18 that cable capacity will be expanded to 18 million fiber kilometers. Post its acquisition, the stock up 4%.
And the rally in graphite stock continues. The HEG management tells CNBC TV18 that they expect graphite electrode prices to sustain at current levels on the back of strong demand.
GNFC, that stock gains ahead of the analyst meet to be held today. All right, those were the top stories that we were tracking this morning in terms of individual stocks. But the big news that we're awaiting is the NCLT verdict in the Tata Mistry case, which is due any moment now. Shireen Bhan joins us for a heads up. Morning, Shireen.
Good morning, guys. Yes, this was expected last week. In fact, on Thursday, the verdict was expected at 4 p.m. but was postponed to this morning. Now, let me just wrap up very briefly for our viewers what this is all about. The sum and substance of the arguments made by the Mistry camp in the NCLT are to do with the fact that they claim the Tata trustees have interfered with the decision-making powers of the board, and the articles of association of the Tata sons enable them to make the board merely a dummy. Now, according to the Mistry camp, this is a violation of the Companies Act of 2013. This is a violation of the concept of board management, and this is in fact oppressive, and that is what their claim has been. They have stressed on the fact that there needs to be board management, which is provided for under the Companies Act of 2013, and more importantly, they've also sought the quashing of Article 75. This is under the ambit of the Articles of Association, which allows the majority to restrict the transfer of shares by the minority shareholders, and that is one of their arguments as well. So what will the NCLT do? How will the NCLT rule? That's the big verdict coming up in a few moments from now. We'll be tracking the action. Our team is at the NCLT, but for now, I hand it back to you guys.
All right, Shireen, we'll wait by then for that verdict in the next few minutes is what we're expecting. A quick check though on the markets for the time being. Well, the Nifty has met resistance at around the 10,816 odd mark. Remember, that's the level from where we saw a bit of a U-turn in Friday's trading session. So the important point today is the start was in the green, but from there we have come off a tad bit. How do you trade the Nifty from here? Ashwini Gujral joins in for a quick technical check. Hi Ashwini, good morning. What's the trade on the Nifty? We've come off a tad bit from the top. Is this a buying opportunity or we're not seeing follow through? So you're looking to short the index.
See, the issue today is that, all the cats and dogs are going up, whereas large stocks are coming off. The Bajaj Finance Finserv twins, they are down. HDFC Bank is down. HDFC is down. TCS is down. Titan is down. If so many large stocks are down at a key resistance zone, then it becomes very difficult for the market to gain momentum. With this sort of momentum, you cannot cross significant resistances, and that is because there is no country specific trigger for us. This tariff war, etc., that doesn't bother us a whole lot. So my sense is that possibly longs should be trapped by now, and with a stop at about the high, if you get short here, I think a lot of the market will be in the red before the day is over. So that is a trade we are trying out. In case the market surprises and starts taking out 10,850, etc., then we'll see what to do. But the risk is hardly 30-40 points, and the downside is open all the way back to 10,550. So that way, this is a good time to get short. Having said that, individual stocks, TCS is a sell with a stop of 1900, target of 19. I think there's a mistake. Stop of 1950, target of 1900. Titan is a sell with a stop of 830, target of 800. And Dr. Reddy is a buy with a stop of 2300, target of 2420.
All right, Ashwini, fair point there. 10,550 on the Nifty, but just hang in there. A word on V-Mart Retail. That stock has hit a fresh high. The mid-cap index is doing fairly well as we speak. 3 stocks in the green. V-Mart Retail crosses 3255. This morning we had a note from Jefferies. They've increased their target price to close to around 3,600 rupees on that stock. What would the chart suggest on V-Mart Retail?
See, it was up on Friday also. Now, if you hold it, it's a stock which is outperforming. Keep holding on. Don't think you can really buy into it after 25-30% style move. So this is, this is the kind of mid-cap people should be in, which is at new highs. So some stocks will continue to move up, whatever the market does.
Okay, all right. Thanks so much for that, Ashwini. Well, on that note, we'll slip into a short break. You come back. We'll continue our focus on the markets. We'll also be waiting by for the crucial verdict, the Tata mystery case. Stay with us.
Excuse me? ये बंधा हुआ है ना?
बस खुल गया। पीपीएफ अकाउंट खुल गया।
अब खोलें पीपीएफ अकाउंट आईसीआईसीआई बैंक के आई मोबाइल ऐप से। एक ऐप में पूरा बैंक।
All right, keep an eye out on individual stocks. We were talking about V-Mart Retail. V2 Retail on the back of that has spiked higher as we speak, as well as we have Cera Sanitary where on the back of that brokerage note that came by from ICICI Securities, that one's up about 2.5–3% as well. But there is still volatility, and the stock markets, as they weaken amidst high volatility, what will be the fate of IPOs and all the other equity issuances which are on the road? Well, will the corporates be able to raise money and raise funds from the markets? Nisha Poddar, our colleague, caught up with the MD and CEO of Kotak Investment Banking to pose these questions and also ask about the trend of PE investors in the market. Listen in.
Last year was, I think, 70–75% fixed sector. So you will not see that kind of dominance. You'll still see some issuances. You've already seen some issuances come from the fixed sector, but that proportion will be quite small. So we will see diversified infrastructure companies coming. Whether they are from the power sector. We do see pipeline in real estate. Some QIP issuances have already happened. So we're going to see a little more diversity this year. Some consumer companies will continue to come to the market. So we will see diversity. I think you asked about renewables. Renewables is a virgin space for the Indian primary markets. I think investors are watching this space with interest. We have to see the first 1 or 2 issuances sort of come through. Right. I'm happy to see from the pipeline that these are the first 1 or 2 issues that will come out as strong companies with excellent track record.
We have seen IPO trend not for growth capital but for giving exit to the sponsors and private equity players. Is that going to be the trend for this year as well? And how are private equity players poised in this particular market?
So for the last few years, we saw most of the IPOs being for OFS because of the capital invested in 9, 10, 11. Particularly to the financial sponsors. I think this time you will see a change in trend. You will see new capital going into companies. It will not be all for exit. This is one part. The second part, again, I want to go back to 2017 in particular. In the context of private equity, I saw a very interesting trend. I saw that it had a great year for new investments and a great year for exits. And nothing can be better than that for the financial sponsors. I think financial sponsors in general have had a good time exiting the markets. My sense is they will look to do new investments. And the trend that I'm seeing from financial sponsors in recent times compared to the past is that now they are like any strategic investor. So we see them investing in companies for greater control, for greater shareholding. So they are the majority shareholder. And I think they're just not looking at minority investments. I think a number of them are also looking to owning a larger chunk of shareholding in companies.
Well, over the weekend, I spoke to noted investor Mr. Vijay Kedia. He told me that he's fully invested at the moment. For good measure, he has added. That's, some advice for investors. Buy like a bull, sit like a bear, and watch like an eagle. Let's hear him out. What is the most important point you look at? We look at, the PE, EV upon EBITDA. Some talk about growth, ROC. For you, which is the most important among all these ratios that we talk about?
Now, to me, actually, concept is very important. So forget about the bottom line, forget about the top line. What is the growth in the company? The concept and the growth, which is very important.
Right.
So me, the most important factor in choosing an investment is actually the growth of that company.
Growth is top of mind, sir. I was looking at some of your holdings, and in the recent past, Everest Industries, that's something, that people are interested in. You have increased your stake. I think now your holding is roughly around 5% odd. What would you term this? You're known, sir, for this bottom-up approach. And maybe top-down as well fits for Everest Industries. So what would you term it as? Bottom-up or top-down?
Actually, I would say it's a blending of both.
Okay.
There are hardly few companies listed in this space. Only 4 companies, I think 4 or 5 companies are listed. So, and I think stock is also, what I feel, I may be wrong also, stock is also cheap.
Okay.
And it's a blending of both, as you asked.
Just take a look at the last few years. The sector leader is something that doesn't grab your attention really. You look at maybe player number 3, player number 4 in a market. Case in point being a Cera Sanitary Ware or maybe even an Atul Auto. They were not leaders in the sector, but they were big multi-baggers for you. Run us through the investment thesis there.
It was very simple actually. When I bought all these stocks which you had mentioned just now, Aegis and whatever, Atul Auto and Cera Sanitary Ware, the biggest advantage actually was in my favor. That market was actually pretty bad that time because we had just come out from that coma kind of situation of Ketan Parekh scam and all.
Right.
So stocks were also very cheap at a throwaway price. So all these stocks were available at maybe a P of 5 or 6 and giving a dividend yield of around 5, 6 or 7%. And plus economy was also turning around.
Yeah.
And same case was there with all these companies. They were also turning around. So I got that advantage. So that is why all this become a multi-bagger.
Okay, all right. The other space, Mr. Kedia, that everyone's talking about is the chemical space. In the last couple of years, and that's been getting a lot of attention. I understand that you did a lot of ground research. You visited China, you saw how the industry was shaping up there, and then you backed Sudarshan Chemicals, which, by the way, I think it's a 10-bagger from the time you bought it. Tell us, how does that go about? How important is ground research?
Why I zeroed into Sudarshan Chemical, because I was following this company for last many years, maybe for last 15-20 years.
All right.
So my initial stock was bought in 1992 or 3, a very small quantity, so which I held on to till 2014. And when I found that this structural change is happening in this pigment industry, then I bought Sudarshan Chemical. So I was lucky that I got the desired quantity also. So that actually played a bigger role in that.
Absolutely. And what about the chemicals industry? Most team left?
Of course. I think specialty chemical, not general commodity kind of chemical and all. And pigments and all, I think India is actually going way ahead than China.
Broadly, I wanted your view on the SME space. If you could explain to all our investors as well out there, it was supposed to be a good opportunity. Of late, there's a lot of fear.
I'll tell you, I personally do not discriminate whether it is a small cap or mid cap or SME or main board. It doesn't matter to me.
Yeah.
If I like the company, I buy in any platform. If I do not like, I can sell any stocks tomorrow.
True.
Last year, I was very much bullish on Karnataka Bank. At one point of time, I was holding 2%, as you know that. But somehow I was not comfortable because to me, peace is very important. Peace is more important than making money in the market.
True.
So. But I was not happy with the performance of the company. So I sold my Karnataka Bank. Similarly, I cut short my position into Aries Agro also.
All right, this week, remember, we have TCS reporting their numbers. Let's hear out what market experts are actually expecting from specific sectors as well as the overall markets.
14% for our entire coverage. Within that, the top 5 companies we are expecting at around 10-11%, but the mid cap we are expecting very strong growth. And what is more important is for the quarter we are expecting TCS to contribute almost 60% of incremental profits of the total IT profits that we are projecting for our IT universe. As far as we are concerned, we liked Infosys. We think that the post-management transition, the business change can bring in good momentum going forward. Plus the gap with TCS has expanded significantly. And capital reallocation, as has been the theme in the sector, augurs quite well from the valuation perspective for some of these names.
Bajaj Auto last quarter also indicate that the subcontinent sales are extremely strong on the export side. The rupee would be, they would be one of the best proxies on a weak rupee. We've seen TVS Motors show a lot of traction on the volume front. Hero MotoCorp again now stands to greatly benefit because of the MSP. So sum of parts auto is the best, best variable industry which you have, given now that the MSP and the rural effect will also kick in after a very strong monsoon. So we continue to be overweight Maruti, Mahindra, Ashok Leyland, and the dark horses are the two-wheelers. So Bajaj Auto and Hero MotoCorp could be the relative dark horses in the next 6 months.
I think it's going to be pretty strong this time, Prashant, given that we are coming off a quarter on a year-on-year basis where you had a demon issue actually last year. So there's going to be strong growth coming in. So our coverage universe is likely to grow at around 22%, whereas the Nifty growth itself is going to be around 17% in terms of profit. Similarly, on the top line also, I think 13 to 14% kind of a growth is what we are projecting. So I think on a Y-on-Y basis, I think it's going to be pretty strong. We also continue to favor the large caps only basically, and obviously they have an advantage.
With gains of around 50 points, but in the futures and options space, I'm looking at ICICI Bank. Today, in fact, the total addition in terms of open interest is roughly around what? Around 35 lakh shares approximately have been added in terms of open interest. But the total open interest is 12.5 crore shares. Now, this is much higher than the normal 7.5 crore that we normally see. Remember, there's been some delivery-based selling as well. So just be very, very cautious because this kind of open interest is indicating a bit of a big move. 12.5 crore shares, and we're in the initial part of the series as well. So that's just one factor in terms of ICICI Bank. 12.5 crore shares, today 35 lakh shares have got added on that front. But moving on then, market volatility seems to have had some impact on investment flows into mutual funds. Now, equity fund inflows actually saw a 32% drop in June. That compares with May. Prashant Nair joins us to analyze the trends. Hey Prashant, good morning.
It's not looking pretty at all. I mean, actually, the June number is quite sobering, to put it mildly. I mean, just look at what has happened in the month of June. And we begin, as always, with looking at pure equity inflows, which includes equity inflows, flows into equity schemes, arbitrage funds, arbitrage schemes, and it also includes ELS's equity. I mean, we always look at balanced funds separately. There are some who take 50% of balanced funds as part of equity inflows, but always better to look at it separately. So this is pure equity. And look at the fall in the month of June as compared to May. That's a 32% fall. I mean, the number is now 8,237 odd crores or so. I mean, this is a far cry from, the numbers we saw earlier this year, or, which is in February, which was 16,000 crores plus. Or, you want to compare this to the, a couple of months of 21,000 crores or so that we actually used to get.